So I've got Bitcoin at an all-time highs, and we're going to break it down technically and the possible trading opportunities for it this week. But you need to understand the fundamentals behind Bitcoin and how that currency came about. So the problems of barter trading led to the emergence of gold as a medium of exchange. And then the shortcomings of gold as a form of payment led to the rise of paper money. And then when paper money also had issues and difficulties, Satoshi Nakamoto came up with Bitcoin, which is the latest form of medium of exchange that we have now. So for you to be able to understand each and every problem that led to the emergence of Bitcoin that we have now, and then focusing specifically on cryptocurrency, your focus should be especially on the 1% crypto. Now, what do I mean by the 1% crypto? Now, the 1% crypto is just a combination of Bitcoin, Ethereum, Solana, XRP, Cardano, and then the rest are just alternative coins. So the fundamentals that underpin Bitcoin and Ethereum, then the rest of the 1% tend to be reflected in the alternative coins. So if you can understand the direction of Bitcoin, especially, you can be able to be positioned well for your alternative coins. And that means now you need to understand Bitcoin, how it is moving, and then you can position the rest of your alternative coins and the rest of your coins correctly. That's why when you see Bitcoin is bearish, the whole crypto becomes red and people cry. But the main determinant is Bitcoin. So let's break it down so that when you trade it this week, amidst the fundamental events that are coming in, and then whichever way it goes, you know exactly why it is doing that. So we have, of course, a lot of fundamentals that are coming up that will determine how Bitcoin is going to behave. But what I want you to notice here is that the fact that Bitcoin being at an all-time highs and how we are going to trade it will determine how we're going to trade the rest. So let me just mark this as our high. Okay, that is our all-time highs. And like I've explained, usually when price reaches an all-time highs or an all-time low, that is when I actually begin to apply the principle of balance, which basically states that the market doesn't go up forever, neither does it come down forever. The market trends up so as to drop and then drops so as to rise. Meaning you can be better positioned when you understand trades at tops and bottoms. So this is it. On the monthly, we are at an all-time resistance. And then from here, we just want to now understand whether there will be a formation of a downtrend, signs of a downtrend beginning to appear here. What are those signs? A double top, a triple top, market beginning to break lower lows and then failing to break previous highs. That is the signs of a downtrend. When you see that here, that know that market is going to go down. But if you don't see it and then Bitcoin breaks here to form higher highs and continue, then the rest of the crypto market would actually go up. Okay, so from this understanding, we can therefore come to now once we have this on the monthly, I can switch to any smaller time frame, and I usually prefer the 4-hourly to be able to break that. So of course, as you can see, this becomes your all-time resistance, and price is dancing around this all-time resistance. So like I said earlier on, from once you see price at an all-time resistance, the next thing you want to understand is how is price forming here? Is it breaking the highs? Is it breaking the lows? So if you can see here, you have a high that the market went and then cleared, and then you have another high. So if you just do this, that is like your 3 touches. What is happening here is that market is actually grabbing liquidity. There's orders here and then orders here and then orders here, and the market seems to be breaking all of them. So that means now we need to study price on these other previous highs. So we have a high here that has not yet been tempered with, and then we have lows here. We have these other lows, this, and then this, and then this here. So we need to now understand how price is going to behave between these highs and then this new low, especially when price either reaches here and fails to break it completely and breaks back inside here, or price is going to continue to break these lows. If price breaks this low and then fails to form new higher highs, then we can know that Bitcoin is going to go down. So as we talk now, Bitcoin is at a very important key level that we just need to wait for what will happen around this area here to determine the next move, which could actually make Bitcoin to go to an all-time highs or lows. So what happens here will determine what will actually happen to the rest of the crypto. But what I want you to observe here is that we have a lot of fundamentals this week. And then these fundamentals here, including Form C on Wednesday, which will be tomorrow. And then we have Thursday, we have unemployment claims on Thursday. And then finally, Friday, we have the non-farm employment change. So all of these, they have a say on whether Bitcoin is going to break to all-time highs. Remember, Bitcoin has been treated also like another safe haven. So people treat Bitcoin just like the way they treat gold, and then also the Swiss pairs as a safe haven. So when there is a lot of uncertainties in the world, especially wars and then unfavorable interest rates and all of that, people tend to flock into buying Bitcoin because it is a safer haven. So let's see what will happen today. But I am really interested in market forming. If it forms lower lows, taking these lows and then fails to do this, then we can sell. If it breaks and then continues to form highs, then we can switch to buys. So let's just see what happens with Bitcoin, but it is at a very interesting area.